Hello students, today I'm going to take you through the next chapter, that is Dissolution of Partnership Firm. So first and foremost, let us understand the term Dissolution of Partnership, which means the partners terminate their connection with the firm and the remaining partners continue the business of the firm under the same firm's name under an agreement. So over here, what we understand is that the partners are going to cut off their connections with the firm, while the remaining partners or the continuing partners will continue to do their business. For this, the examples are admission of a partner, retirement of a partner, death of a partner. So what is the second sentence says that dissolution of partnership firm means reconstitution of a partnership firm due to admission, retirement or a death of a partner. So what we need to understand is the firm continues, it does not come to an end. Then in that case, what exactly is dissolution of a firm then, or a partnership firm? That is, all the partners of the firm cut off their connection with the firm and the business of the firm is closed down. So in case of dissolution of a partnership firm, the partners are going to cut off their connection. That means they are not going to continue their business anymore and the business of the firm is coming to an end. It is closed down. Well, as per the Partnership Act 1932 section 39, the dissolution of partnership between all the partners of the firm is called dissolution of the firm. Well, the next point is dissolution of firm takes place in any of the following ways. So how does it normally come to an end or the closure of the business? Point number 1, with consent of all the partners or agreement among all the partners. Second, when the business of the firms become illegal. So in the eyes of the law, it is not a correct way of doing the business. When a partner becomes insane, incapable, he is not able to execute his duties or responsibilities. That is, when a partner becomes permanently incapable of performing his duties as a partner. Well, the next important discussion is on difference between dissolution of partnership and dissolution of partnership firm. This can be asked for your 2-mark question. So point number 1 says that termination of business, no, it does not get terminated under dissolution of partnership, whereas dissolution of partnership firm means the closure of business. That is what we have understood in the meaning. You can look here, dissolution of partnership firm means it is closed down, whereas in case of partnership, the business of the firm continues. Second point, settlement of assets and liabilities. So while doing admission, retirement, we have learned that we prepare revaluation account and we also prepare a new balance sheet, whereas in case of dissolution of partnership firm, the assets are sold and the liabilities are paid off. I'll explain to you further what exactly is selling of assets and payment of liabilities. Third point, closure of books. So in admission, retirement, whatever that we do, we are not closing the books. We are just preparing the financial statement, that is the new balance sheet. Whereas in case of dissolution of partnership firm, the books of accounts are completely closed. Settlement of accounts. In case of dissolution of a firm, the firm disposes of, meaning that is sells all its assets and make payments in the following manner. Let's say, suppose you and your friend are doing the business. Now you're called as partners of the partnership firm. So in order to start your business, you will invest on certain assets or you will purchase certain assets. In order to purchase assets, you might use your own money, okay, or you might go for a borrowed capital, like in the form of bank loan, or you call it as personal loan, or borrowings from your relatives. Apart from that, you will also say that you will make the payments in future for various creditors, or you might have certain bills on hand. So, first and foremost, what does the settlement of accounts mean? That is, you need to sell your assets and you need to make payments in the following manner. So, when you sell your assets, you have money in the hand. So, first and foremost, you need to pay all the outside liabilities like payment towards bank loan, creditors, bills payable, and so on. The second point is you need to make payment of partners loan. Let's say A, B are partners. B has given loan to the partnership firm. So the second point says that make payment towards the partners loan. And the third one being final payment of partners capital. So after clearing all your liabilities, after making the payment, whatever the residual amount that you have, that will be paid to the capital as capital to the partners. The next one is accounting treatment. So when a firm is dissolved, usually the following accounts are to be prepared. First, realization account. Second, partners capital account. Third, cash or bank account. Now there is an important 2-mark question, that is, what do you mean by realization account? Is an account prepared at the time of dissolution of a firm to ascertain the profit or loss on the realization of assets and payment of liabilities. So first and foremost, what you need to understand is it is prepared only at the time of dissolution of partnership firm. And what do you get? You will ascertain the profit or loss, that is realization of assets, nothing but selling or disposal of assets and making payment of liabilities. The profit or loss is now transferred to partners capital account in the profit sharing ratio. So the second point says that when you prepare realization account, either you will get a profit or a loss. Now this need to be distributed among the partners, transferred to partners capital account in the profit sharing ratio. Let's quickly look into the various journal entries under this concept. First and foremost, for the transfer of assets in the book value. Book value is nothing but the value that is reflecting in the balance sheet. So realization account debit to asset account. So for every asset that will reflect in the balance sheet, we are going to pass the journal entries. The second one, for the transfer of liabilities, again in the book value, the liabilities account debit to realization account. For the sale of asset, we have understood that when you're closing your business, you need to sell your assets. So that means this is the journal entry that you need to pass. Bank account debit to realization account. And when you're making payments, we will also pass journal entry, which I will be explaining to you shortly. Asset taken over by the partners. So if partners are taking over the assets, then partners capital account debit to realization account. Taking over means he takes up the responsibility to dispose the asset, or he is acquiring the asset and pays the money to the firm. Next, for the payment of liabilities or for all those unrecorded liabilities, then realization account debit to bank account. For a liability which a partner takes responsibility to discharge means the partner is taking over the liability. He is going to pay the liability of the firm. Then the journal entry will be realization account debit to partners capital account. The next important journal entry is for the payment of realization expenses. Now in your question also, it is very important to understand who is making the payment of realization expenses, nothing but the dissolution expenses. First and foremost, if the firm is making the payment, then the journal entry will be realization account debit to cash or bank account. If realization expenses are paid by partner on behalf of the firm, then the journal entry will be realization account debit to partners capital account. So in your 12-mark question, students, you will get only one scenario, That is, who is going to make the payment? Is it the firm which will do the realization expenses, or the partner who will make the payment on behalf of the firm? Okay, so any one you will get for your 12-mark question. Next, a 2-mark question for you. How do you close realization account on dissolution of a partnership firm? So you can write this as your answer. That is, if there is a loss or if there is a profit on realization. Remember, any one of the scenario you will get it. You will not get both. Just like in revaluation account, you will get either revaluation profit or you will get revaluation loss. So likewise, you will get only profit on realization or you will get loss on realization. In that case, if it is a profit, then the journal entry will be realization account debit to partners capital account individually in their profit sharing ratio, which will be given in the question again. Let's say in case of loss, then the journal entry will be partners capital account debit to realization account, again in the profit sharing ratio. Next 2-mark question. Why is realization account prepared? So you need to write the points. First and foremost, to close all the accounts of various assets and liabilities appearing in the books of the firm, and the second one is to find out the profit or loss on realization of assets and payment of liabilities. Next, journal entry for transfer of accumulated profits in the form of reserve fund or general reserve. That is, in the balance sheet, if you have reserve fund, general reserve, then you're going to pass the journal entry as reserves account debit to partners capital account in the profit sharing ratio. Point number 10, that is for payment of loans due to partners, then partners loan account debit to bank account or cash account. Kindly make a note of this, students. This is an important journal entry which you need to carefully pass it when you are solving the problem. So if partners loan is there, in the previous point I was explaining, if A and B are partners and B has given loan to the business, this is called as partners loan. Then the journal entry will be partners loan account debit to cash or bank account. The last journal entry is for the settlement of partners account. So if the partner's capital account shows a debit balance, he has to bring necessary cash, for which the entry will be bank or cash account debit to partner's capital account. This is only when you're going to get a debit balance. If you're getting a credit balance, then it is nothing but the final settlement, again, which is done through partner's capital account debit to cash or bank account. Friends, this is the format of realization account. You need to follow this as it is. The entire realization account is broken into steps, like step 1, step 2, step 3, step 4, and the last part is when you're doing the balancing, you will get either profit or you will get a loss. This is the format for partners capital account. Whatever the capital reflecting in the balance sheet, you will bring down, distribute reserves, profit and loss. Likewise, you need to follow realization account. Based on the realization account, you have the remaining entries. At the end, you will be doing the balancing of accounts, and either you will get a final payment or deficiency that is made in good. The journal entry 11, you can read it to understand how this is being passed. Format for cash or bank account, you will bring down the balance reflecting in the balance sheet. Likewise, you need to follow realization account and partners capital account in order to pass these two transactions. Accounting procedure or points to remember. Students, I have given a nearly 11 points to remember with 2 important notes, what I would like to say is all these points you will be able to understand while working out the solutions. Again, when I am working out the problems for you, I will explain these points. The continuation of the video, you need to watch it with the help of the format of realization account, partners capital account, and cash or bank account.